I'm Greg Hunter. Welcome to USAWatchdog.com. Will's a real treat. He's not on very much. He's just got a globe-trotting schedule. Nations, big sovereign wealth funds, and nations hire him for his brain power and consultancy work. I'm talking about Martin Armstrong at Armstrong Economics. Martin Armstrong, thank you for joining us today on USAWatchdog.com.
Well, thanks for inviting me, Greg.
Good to have you on. I know you have your economic confidence model. You are expert in geopolitical and financial cycles. And I just want to start somewhere simple. The dollar. I've heard you say in the past that dollar going down, good in value, dollar going up, bad. Why?
Well, I don't think people quite appreciate. I mean, they keep waiting for the dollar to crash, and you have these people that are great at sophistry, but they really don't understand the world economy. They keep talking about, the U.S. debt, it's at 20 trillion. Global sovereign debt is over 200 trillion. The U.S. basically is holding up the whole world, and U.S. debt is why it's the reserve currency. Europe couldn't make it because they would never consolidate the debt. You have to go to Germany to buy debt, or Italy, Spain, etc. They're all separate still. So what you have is also a crisis that's been building where emerging markets, to sell their debt, they issued it in dollars. So you have, the dollar going up is what breaks the back of the world monetary system. So a lot of these people that keep, calling for the dollar to crash in order for gold to go up or something, I just laugh at them because, the world monetary system is going to do great if the dollar goes down. Everybody's going to be borrowing more and say, this is fantastic. It's only when the dollar goes up do we get things that break. I mean, that's why the dollar went up during the Great Depression. And what happened? I mean, FDR confiscated gold and devalued the dollar. When the dollar went up into 1985 to all-time record highs at that stage, what did they do? They held the Plaza Accord to devalue the dollar by 40%. I mean, the U.S. always wants the dollar down, but, it's just not going to work that way.
So some people are watching this dollar go. It went from the high 80s and looked like it was on its way down, and then it's all the way into the low 90s again. Does that give you caution that the dollar's going up? We can't have that. Is that worrisome to you that the dollar has been rising of late?
No, the dollar is going to go probably up pretty strong into around 2021 at the latest. I mean, that's what's going to break the monetary system. And people don't understand what's going on in Europe. I mean, the Italian elections really sent a shockwave in Brussels. I mean, I had to run over there within a matter of days.
When the party in power that was just so people know, the party in power that is amenable and friendly to the EU got booted out, and the new party is like, we want our own currency. We want our Italian lira back, right?
Well, it's basically everything. I mean, the problem with Europe is, they've lied to everybody from day one. I mean, they came to us. They had even attended our World Economic Conference in London. Back in 98. And I sat down with them and said, okay, fine. This is how we have to design it if you're going to create a currency. And most people don't realize, they think, the U.S. is going to go down and Europe. This was the idea that came out of the Plaza Accord. It was the U.S. that told them to do this. All right. And what happened was they felt that they could not get everybody to agree to a federalized Europe. So they sold the idea of a single currency first. And that's why they never consolidated the debts. So,
and that's why you have that's why you have Italian bonds in trouble and Greek bonds in trouble and Spanish debt is in trouble. And they never took care of the debt problem. They just said, hey, let's print money.
When they formed the United States, what happened was basically Alexander Hamilton said, look, everybody contributed to the cost of the revolution. So they took all the debts from the member states. That became the national debt.
Ah,
After that, every state was on its own. So, Louisiana, Florida, New Jersey, Illinois, everybody issues their own debt. Now, the difference between the United States and Europe, that debt is not reserve currency status. A bank, it's going to have reserves at the Fed, is only federal debt. That's it. They don't have that in Europe. This is why the banking system is an absolute disaster because, to be politically correct, every bank had to have a little piece of everybody. So then Greece gets in trouble. All right, well, we're going to give them a haircut to help out. Well, you're cutting the bank reserves. The other problem that we have that people don't really appreciate is that in 2008, what happened was that they took the bad loans off the banks books in the United States and they stuffed them really into Fannie and Freddie Mae. All right, so in Europe they never did that. The bank, the bad bank loans are still on the books of all the banks. So Draghi has been, making interest rates negative, etc., rather than deal with the problem directly. So you have now a banking system that is disastrous. It's still not, it's a good stiff wind is going to blow it over, and so you have almost 10 years of quantitative easing, and you've had deflation. Nothing's happened. The system is really that bad. And then why do we have bail-ins? People don't understand this either. It's again because there is no consolidation of the debt. If Italian banks got in trouble, then what? In Brussels, they go, oh well, gee, if we bail out the Italian banks, that's transferring money from Netherlands and Germany to help Italy. Oh, that's not acceptable. So we make it a bail-in, and all the shareholders lose the money. This is what I'm saying. It's like trying to be a little bit pregnant. It's you want a single currency, you want to federalize Europe, but then at the same time, oh no, everybody keeps their own debts, and we can't do transfer of payments because that's going to be favoring one over the other. So it's a total mess.
Is this why you think the dollar will get stronger? Is because we are a much cleaner dirty shirt in the hamper as opposed to the EU and their single currency?
Yeah, I mean, look, you have major institutions, pension funds, sovereign wealth funds, etc. They, the dollar is the reserve currency because it's the only place to park money. They pick up a phone and say, buy me $1 billion. Where are you going to do it? It's the U.S. That's it. You don't have a single bond market.
And when you think the dollar is going to it's not going to crash. The dollar is not going to crash. No. It is going to go higher, even though Donald Trump is
alternative. All right.
So the dollar. So So I just want to make sure I get this right. Your prediction: forget the dollar crash. It ain't going to happen, people.
No. It's impossible. There's nothing on the opposite side to compete against the dollar. All right. China's not fully free yet. Japan is a joke. They've been buying 97% of their own auctions. It's really a complete mess. There's no competition to the dollar. And I've been in meetings in Washington. They understand this. And they, asking me, okay, fine. Well, how do we make the dollar not the reserve currency? I said, you can't. You can't pass a law because there's no other competition. So
all this talk about the petro yuan knocking the dollar out of the perch and all that, you're saying forget that. That's a fantasy.
I mean, look at all that is just total sophistry. Just look at
that. So that's not going to happen. The yuan is not going to replace the dollar. The petro yuan, the gold-backed yuan, whatever you want to call it, that is not going to replace the dollar or compete with the dollar much. Is that right?
The dollar is not even a petro currency. That's an absolute falsehood. If you take the energy and you look at it as to global GDP, it's you're talking about 7%. I don't care if you want to price it in Turkish lira. It's not going to change the dollar.
Might Donald Trump? They're talking about a currency or a debt reset, and I'm thinking more and more that they'll do this just to crash the dollar on purpose. They'll just say, okay, we're going to crash the dollar, period, the end. Well, and they're talking about an 80% devaluation of the dollar. Do you see them forcing the dollar down in some type of a reset? Because that would make sense to me now, listening to you.
What happens is the whole thing is going to break. And the Federal Reserve has become the central bank of the world by default. Now, political behind the scenes, you have to understand what's going on. The Fed wanted to start raising rates in 2014. They waited to the last quarter of 15. Why? Because emerging markets were saying, please don't do this. IMF was lobbying them. The ECB said, oh, if you raise rates, all our banks are going to get, it's going to be difficult. So you had Janet Yellen kept coming out saying, listen, we have to normalize interest rates. Because at the same time, you have all the pension funds that need effectively 8% going bust. So you get a pension crisis coming, which the central banks have created. The Fed understands this and keeps trying to push interest rates up, and everybody's screaming. So the Fed has lost the power, all right, to actually control the domestic economy. It's lost domestic power to international. And that's what I mean. It's become the international reserve currency and central bank because everybody else is lobbying and saying, please don't raise your rates because then we get hurt. So I would say by 2021, you're going to see a currency reset, but it's going to be something, again, like Bretton Woods or something along those lines, because those are a lot of the discussions that I'm having with governments around, from Asia to Europe.
Wow. Thank you for coming and sharing this.
Everybody understands there is a problem. But when you're dealing with governments, I've dealt with them all. I was the one called in by Bank of China back in '97 in the Asian currency crisis. I was actually helping them become capitalists, so explaining different things and how they worked. But, you have to understand that, a politician, unfortunately, and this is why I say, if you want any kind of real reform, we got to get rid of career politicians. Mm-hmm. Because what happens is it is Adam Smith. Everybody acts in their own self-interest. So I can go in and tell them, listen, if you don't do this, this is going to crash. And they'll go, yeah, but maybe you're wrong. And why? Because if I wanted to run for president and I say, vote for me because I saved your job, you're going to look at me and say, well, how do I know I would have lost it? All right. It's much better you lose your job and then I say, vote for me, I'll get the guy that did it. That's politics. They love committees. They love investigations. They will never do anything in advance to prevent a crisis. We have to have crisis.
Do you think? That's right. Never let a good crisis go to waste. Right. That's what Rahm Emanuel said. Do you think we'll have a crash in 2018? Some of my sources think it's getting close. The yield curve is inverting, or it's like between the 10 and the 30 is like 0.13%. It's a little more than 0.1%. It's been dancing around there. Some people are thinking this is a bad sign for the economy. Do you think we'll get a crash before the midterm elections? Do you think Trump can keep this going?
The economy itself, you can look on our website. We've published charts of GDP growth. I hate to tell you, but if you chart GDP growth, for the last 20 years, you see it's in a bear market. It's been declining steadily. Now they say, gee, at 3% GDP growth, they're like celebrating.
I'm talking about, but the yield curve. It's a 10-year Treasury. It's at 3. The 30 years at 3.25. The 10-year Treasury is at 3.1. It's about 13 basis points. The yield curve is flattening. So is that a sign of bad things coming, or can this be put off till, like you said, 2021?
Well, no, you're going to go into it. The economy, the economic growth per se,
Yeah.
is in a declining mode out to that period. Not just us, that's the whole world. All right, even China is going through it. But um, what you have to have is I know a lot of people keep saying, "Oh, the stock market's going to crash." No possible way.
Yeah. Oh,
You
wow.
know,
So you're saying that right now, listen, the market's not gonna crash. You're not
not
foreseeing
the
any
stock market,
crash.
interest rates, bond market, yes. Um,
Okay.
but the stock market will go up with higher interest rates. It's not going to go down.
So do you foresee any kind of I don't want to be doom and gloomy or anything like that, but I'm trying to get your perspective because it's a lot different than other people's, and you've been right a lot. So you're not foreseeing any crash in the stock market, but do you foresee a crash in the bond market?
Yeah,
Uh,
it's the bond market that's going down.
when do you think that might happen?
We're already started into it. I mean, what you're going to see that would be the catalyst that starts it is um, look, I just published on our blog today. I went through, Draghi made a little speech, and I decoded the code words that he's using. But he's effectively saying to solidify the EU, consolidate the debts.
What you're saying?
And yes, if they, you're looking at Draghi leaves next year. You have 10-year Italian and Greek bond rates below that of the United States. It's a completely manipulated market, but you have to understand that both Japan and Europe have destroyed their bond markets, completely, utterly destroyed them. They are the buyers. That's it. There's no pension fund that can buy 10-year paper at 1.3% when they need 8% to break even. They're locking in a 10-year loss. They can't do it. We've been helping major funds shifting into equities because it's the only place they can go. There's nothing else. You can't go into the bond side. And once you start seeing the cracks in Europe, you're going to see interest rates rise faster than you have ever contemplated in your life. Because there's nobody in their right mind that can buy a 10-year Italian bond at 1.3%. It's just not going to happen. Once the ECB is forced to stop, those rates are going to go jump to 10%. I mean, instantaneously. So, I mean, just be practical here. I mean, who's going to buy it? Nobody's been buying it. The bond markets have been utterly destroyed.
And hold on, I want to back you up here. I'm sorry, I just did 10% interest rates instantaneously in Europe. What does that do to America? What does that do to us? If it went, and you're talking about this is not like in the year 2021. You're saying that this could crack anytime.
Once it starts to crack, that's it. It's gone.
But it's already started to crack. Is that right?
Oh yeah, but I mean, what will finally make everybody realize it is cracking is simply when you start seeing the rates going up dramatically, and the ECB is at a point where it just can't buy anymore.
And what happens to, and what does this look like in America when we see 10% rates over in Europe?
Well, basically the same thing, more or less, that happened kind of like in the Great Depression. In what happened, what made it so great per se was the fact that there was a sovereign debt crisis in 1931. And when you had, I mean, you can read Herbert Hoover's memoirs. He said capital acted like a loose cannon on the deck of a ship in the middle of a hurricane. He said it went from one currency to the next. He says they couldn't figure out where it was going next. They couldn't get a committee to figure out where the capital flows were heading next. All of Europe basically defaulted, except for France. Britain went into a moratorium, suspended all debt payments. That's why the dollar went up. That's why FDR confiscated gold.
And you're saying that's
behind it,
and you're saying that's going to happen again.
Yeah,
not so much the confiscation of gold, but you're saying everything's going to run over to America.
Right. We were on a gold standard at the time, so he had to confiscate gold in order to devalue gold, or the dollar. We're not on a gold standard today, so they're not going to go running around confiscating gold and knocking on people's doors. That's not necessary. But the capital has no other choice but to come here. So the bulk of it you're going to see is probably going to rush into the stock market, and your key will be looking at the Dow. The Dow will lead when it's foreign capital.
So wow, so good times. So Donald Trump could get elected just basically on the whole world crashing and floating over here. That's what you're telling me.
Look, it's from outside the country. I was just talking to actually, two governments in Asia, and they all said the same thing. They hate CNN. They said, what is wrong with that organization? They're always bashing Trump. From their perspective, they say he's done a fantastic job. He's the only one that's got Korea to back off. The dollar's doing okay. He's working on world trade. From their perspective, hey, he's done a fantastic job.
Wow. And don't believe the propaganda of that, how everybody overseas thinks Donald Trump's a Nimrod. Evidently, they don't.
No,
so what's going to happen? So I want to get to, I know you don't have a lot of time, and I want to get into your conference in Orlando, which is in November, and in Singapore, which is in June. So I want to get to that. So hold on. What's going to happen to gold this time? They're not going to confiscate it, correct?
No.
Then what do you think is going to happen to gold? You see all these reports of Russia adding massively to their gold holdings, China adding to the gold holdings, sovereign wealth funds. Igor von Gruyert says rich people are holding it and adding to their positions in his vaults in Switzerland. Is that crazy time, or what's going to happen to gold this time?
It's kind of crazy time. It doesn't matter. I mean,
but is the price of gold going to go up?
The price of gold will go up when you start to crack the whole monetary system. What makes gold go up is it's a hedge against government, all right? Yeah. And you have to, shake the confidence in the average person, not the people who just buy gold. They're always going to buy gold. You can tell them not to buy it, they'll still buy it. That's not the issue. The issue is when the average person on the street starts questioning the survivability of government. I mean, you go to Starbucks, what do? I mean, I'm in line, and all the young kids just hold up their phone and pay. They don't even have cash. So it's a question of confidence, and only when you start seeing the governments, crack, you start seeing Europe crack, etc., then you're going to see the rise in gold. But gold, otherwise, it's facing a strong dollar at this point. It's not ready to break out. And, these people keep, a $3, rally in gold for 2 days. Oh, this is it. Hurry up, get in. Here we go. And it just fails right back again. You got to look at everything in its entirety. And not just a single market all the time and hear the same scenarios over and over and over again since 1970.
So would you be so what should somebody do? Just sit back and hold dollars? I mean, you're saying that for right now, the dollar's going to go up, equities are going to go up right now. That's what you're saying.
We're in a consolidation period at least until July, where everything's kind of going sideways. Then you're going to start seeing things perking up after the summer, because these things are starting to come to a head. The debt crisis in Europe. I mean, look, there's been plenty of stories about Deutsche Bank. It's in trouble, not in trouble, it's holding on briefly. All right, and you have Commerzbank. If Deutsche Bank was on the brink, and the biggest problem it has is about a $45 trillion derivative book that it still has. Netted out, it's down to probably, 3 times the capitalization of the bank is what its risk is. Now, you would normally take a bank like that and merge it with somebody else. The only other one within Germany is Commerzbank. They're not merging them. There's a reason. Always ask why.
Why?
Because they both have problems. It's too big of a loss to absorb. And then you have the political ramifications between them.
And could you have something like Deutsche Bank? Because the IMF said they are the most systemically dangerous bank in the world not long ago. Could Deutsche Bank just take the whole world down? A Lehman on steroids, as it were?
Well, what basically started the 1931 sovereign debt crisis. It was a bank in Austria. It wasn't even that big. But the Rothschilds were one of the owners. So the news was, when the bank failed, oh my God, the Rothschilds are going down. So once, its impact, economically isn't necessarily that significant, but this is what contagions are all about. A contagion is different. I mean, you can sit there and look at it and say, "Oh, my muni bonds are okay. That company is that municipality is really doing well. They got their budget in line." Fat chance, because you start getting munis going down, and they sell the whole group. All right.
So, and you're talking the same thing that Illinois, which is in deep trouble. They're talking about raising their property taxes to $2,500, $5,000, $10,000 a house on top of what you already got. They're just going crazy to pay these pensions. So you're saying that Illinois could take down the whole group?
Once something like that goes, what happens then is that it makes people look. All right, when Greece went down in 2010, the traders, what did they look at? Oh, gee, we made a lot of money. Oh, who's next? Oh, Portugal. Oh, yeah. Okay. Then Spain, then Italy, then France. This is the way capital moves. So once you crack it with the first one, it may not even be that necessarily significant. But what happens is if Illinois cracks, they're going to go, California really is in the same kind of position. Oh, look at New York. Oh, and then it goes. It just goes.
And you're saying your thumbnail for the economy is don't. My friend Greg Manarino says this too. He says, "Listen, all this is going to begin. It has begun and will end in the bond market. That's what you look at. Forget the stocks. Look at the bond market." You're saying that the bond market is the key here, and you're saying that it's already cracking up. How do you protect yourself?
Well, definitely stay out of any kind of bonds whatsoever. And I don't care if it's a great one or whatever. The only type of bond that would be more secure would be private sector, the big companies. But you also have to realize that interest rates are going up. So, you've had a lot of very smart companies selling 100-year bonds. They know, hey, okay, fine, I'll take it. Thank you very much. But this is insane to buy bonds that are 50, 100 years old. I mean, come on. I mean, you can't even predict what's going to happen next month. You're going to predict something in 100 years from now? It's what you have to understand is that both sides, the business cycle, sometimes, like in the 1840s, it was a sovereign, all the states went bust. All right. So you have some states even went, completely belly up. They never paid on their debts at all. They just wrote everything off. And then you have the 1920s. All right. Then you have corporations went down. This one's back to a government. Where's the excess? It's basically government. I mean, they've been. The only way I can explain it is that it's a complete joke. Why do we even have debts? You're borrowing money that you have absolutely no intention of ever paying anything back. Period. And when I ask this question in meetings, they just look at me like with a dumb face, and they go, "Well, that's just the way everything works." I said, "Really? That's very nice, but no government has ever paid off its debt." and survived, other than the United States did basically in the 1820s to 30s. But um, it's this is the reality. I mean, we're in a situation where the big crisis is government. They're all going belly up. Illinois is a classic example. Um, Instead of looking at actual changes and reform, what do? Oh, well, just go tax this stupid sheep a little bit more.
But by what you're saying, it's a gold is a hedge against government, and you just said the big crisis is government. So I would imagine there's a lot of people that are going to say, crisis against government. Gold's only a crisis against government. People are going to be. I mean, you should have a position in gold. Am I wrong? Just to
Well,
just to have it for insurance.
yes, I mean, gold is going to still go down, all right, as the dollar goes up. But, the timing of it, gold, the real big rally in gold will probably come after 2020 to 2021. Um, when people begin to see that it's a sovereign debt crisis, that's when gold will start to, kick up its heels a little bit and hold on. But it right now, it's like, a big yawn. It's like watching paint dry.
And the rest of the year, I mean, can you just give us a thumbnail for 2018? What is your prognosis for the rest of 2018? What does it look like? Is the bond market going to completely crack up or not?
Yeah, I mean, basically at the beginning of the year, we warned that, hey, look, the first half we're in a consolidation period. Um, I mean, our model gives us specific numbers for buy and sell points, and then how fast they are executed will give you a good sense of you have a crash or not. All right, 1929, it elected a monthly, what we call a bearish reversal, the very first month. 2007, it took 3 months. We have not elected anything, or not even close to it.
So it looks like Donald Trump, and I'm just trying to put a little political slant in here. It looks like he's going to hold on and probably do pretty well. His party, the Republicans, because he ended up re-election to year 2020, he's probably going to hold on and do pretty well in the midterm elections, the Republicans. Is that right? Is that what you think?
Well, it's look, if the Democrats, I haven't looked at the what the computer's projecting on for the midterm yet, but the problem with the Democrats is that they've been still pitching the same Marxist things since the Great Depression. And you can look. We put a chart on about politics. We added up all the seats of the Congress and the Senate, and allocated them according to the party, and then plotted them both out. And it's very interesting. The Democrats peaked with the first election with FDR. After that, they've been getting lower and lower and lower. I mean, it doesn't resonate well with the millenniums that, we'll make your life better by robbing somebody that actually works more than you do. That scenario is just playing out. We're in the process of socialism dying.
Oh, and you think that 2018 will likely probably favor the Republicans?
Look, if the Democrats win, it's fine. That's just going to push you over the hill. But I mean, a lot of the Democrats, they would love to reverse all the tax reforms of Trump and actually double them. They don't really get the fact. They can't stand the fact. Okay, fine, yeah, Trump was right. If you lower the tax rate, the money will come home. And they go, yeah, but we could have got 40%. You're assuming somebody would have brought it home. That's why it's offshore to begin with. So, I mean, Apple's bringing all its money home. I would sell any company short if they didn't.
And, but just if you could so you're thinking that the economy is going to hold together for the midterms because all this money's coming back. There's not going to be a stock market crash. The bond market's crashing up, but you think it's going to hold on through 2018? Is that what I'm getting from you? Or I don't want to put words in your mouth.
The second half of this year is when you're going to start seeing much more higher volatility and more concerned what we call headline risk. Headline risk is all the political problems, particularly in Europe. They're percolating away, and you know it's not that we're that fantastic. It's just that we're the prettiest of the three ugly sisters. That's it. And so the stock market will be the one where capital tends to go in, and like I say, pay attention to the Dow, because the Dow is what foreigners buy. It's like when the Japanese came over here buying real estate. What did they buy? They didn't go down the street buying $100,000 houses. They bought Rockefeller Center. The Chinese do the same thing. They always buy the trophies. Foreigners want the name brands, the trophies. They don't come into the NASDAQ and stuff like that. I mean, the Dow peaked in January and the NASDAQ peaked in March. That's showing you a difference between domestic versus international. So the big problem is the interest rates are going up. A lot of people keep talking, saying, oh, well, interest rates up, stock market will go down. That's complete nonsense. Interest rates doubled between 27 and 29, and so did the stock market. You read a lot of the press back then, they go, oh, okay, fine, interest rates went up. That means there's still a bid for money. Therefore, the economy's doing well. What we now do is that, it's the government manipulates interest rates because they don't want us to do one thing versus another. That's not economically driven. You have to look at the bottom line.
Well, I think it's very encouraging. You're saying the dollar's, well, it's not encouraging. The dollar's going to get stronger, and that's going to be the problem. But the dollar is not going to crash, and they are not going to purposely reset the dollar, correct?
That will probably come around 2021. All right. I mean, there are discussions about that. The IMF has been lobbying to make the SDR, the reserve currency. I'm against that because the IMF is just a corrupt organization. But I feel if you're going to do it, we better start from scratch and create something brand new. But that's my opinion. How that shapes up is kind of hard to say, but definitely something is going to crack by 2021. A lot of people realize that the central banks can't manage the economy anymore. They just can't. And another stupid thing is that, all right, this whole theory that we raise and lower interest rates to stimulate, that assumes a real falsehood. It assumes that you're only manipulating the consumer. Did the government reduce spending because interest rates went up? Of course not. Government just keeps going. So you lower the interest rates or you raise them. It's irrelevant. The biggest borrower in the system, it has no effect on.
So what do you think? So your prognosis for the rest of this year is we're going
basic consolidation still until probably after July, and then you're going to start seeing things perking up in the end of the year, where we're going to start getting a lot more volatility and confusion, and then 19 and 20, it just looks like it's just going to start running away.
What do you mean running away? You mean the bond market?
The bond market will start to come unglued, and also keeping in mind that Draghi leaves next year.
So he can do whatever he wants because he's going to be gone. So, hey, sorry, I don't have to keep my job. So he can do whatever he wants.
He wants out the door because he knows he's created a complete nightmare. What he's done, I mean, just people, always bash the Fed. The Fed has stood up and said, whatever we bought in quantitative easing, we will not renew. We'll let it mature and expire. Okay? So they're reducing their balance sheet. The ECB comes out and says, if we did that, everything's going to crash. No, we're going to continue to reinvest even what we bought before.
So
It's opposite,
Well,
completely
and
opposite.
what would you tell your clients to do right now? You're not really big on gold. If you're holding it, I guess you wouldn't sell it. Is that right? But you wouldn't be a big buyer of it.
I think you know, gold is going to be something that is more for the individual per se. Institutions can buy, gold stocks, things of that nature, but they can't buy, $20 gold pieces and stick them in a safety deposit box. Um, but no, for the individual, I mean, gold. I do recommend more like buying $20 gold pieces, common dates, things of that nature, circulated. Mainly because if you ever get to a point where the government wants to hunt money, you can claim you're a coin collector. It worked last time. Maybe you got a shot this time, but they are hunting money, and this is another part of the problem. I mean, it's. I mean, I was traveling between Brussels and going over to London, through the tunnel on the train, and everybody's dressed in jeans or whatever because they're mostly tourists. I'm the one guy in a suit and tie, and I get pulled over. How much? And the first question out of their mouth: How much money do you have on you? They stop trains going through France. If you're on a train from Switzerland to over to Luxembourg, they stop it in France and they search people's bags looking for cash. Oh, if you got 100,000, that's great. That's ours. That's money laundering. They're just confiscating it all over the place.
So keep a low profile, whether you're abroad or here at home. Keep a low
Yeah,
profile.
you can't really travel with cash or a lot of gold coins anymore.
Yeah, 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 yeah. Let's talk about your conference. Evidently, you have a lot to say. You have one coming up in Singapore in the middle of June. Tell me about your World Economic Conference. You got it on both sides of the world, Singapore and Orlando. Singapore in June, Orlando in November. Tell us about your conference.
Well, basically, that's where we're doing Singapore because we have a lot of people don't want to come into the United States. Um,
Wow.
so that's just it's political issues, and I mean they're smaller events. They're not going to be as big as Orlando, but they're more for our focus will be on Asia in general, particularly India, China, and Australia, the three real big ones. But we cover Singapore. I mean, virtually everybody, Malaysia. So we tend to we'll be issuing a very important report on China that basically explains why and shows the timing for when they're going to replace the dollar and become the new financial capital of the world. But that's down the line, but that's where we're going. And so China is rising. Um, I mean, we have offices in China. We're not blocked in China. They actually gave us a business license, which is pretty rare. And so we publish in China as well. So I mean, we cover the entire world. We're just about everywhere.
And then November is going to be your Mac Daddy in Orlando, and that's a lot of domestic people. I'm sure will want to go to that. What's the cost of the conference? The date is I think November 15th. Am I right?
Uh,
16th.
yeah, they're basically $2,750 a seat. Um,
Wow.
I mean, they're first class events. I mean, these things are, if you ever went to a wedding or whatever, I mean, basically the cost, um, food and open bar and stuff like that. I mean, it runs almost $1,000 a head.
So yeah.
Um,
Okay.
so I mean, they're not, they're a
And
lot of people
you,
use them also for great connections. So we have people flying in. I mean, you meet everybody. Sovereign wealth funds. I mean, we've had central banks actually come up and actually, yeah, I'm with this central bank. I was really surprised that they publicly announced who they were. But I mean,
And
this is effectively what it is. Yes, it's high end for maybe the average consumer, but this is covering the globe. They want to know what the political forecasts are, what are the capital flows showing, what country do I go to? So this is more at for really people that are serious.
and you're going to be on stage for hours, though. I mean, you're going to put on big PowerPoint,
Oh
big
yeah,
screen presentations. You'll be on for hours.
yeah. I basically do it for these are 2 day events
And you're on stage for multiple
for
hours of
2 days.
both. Yes, got it. Yeah, you're the speaker. You're the show. You're it. You're
Yeah,
like Barry Manilow.
I gotta handle all the questions. I mean, they ask me what's happening and whatever. I mean, I can't say, gee, let me check on that and I'll get back to you. They expect the answers right there on the spot. So,
I got one more question for you. I didn't bring this up, but I want to get it now just because I know you're a big political cycle guy too, because you have to watch it all to get the yin and yang, the politics, the
mhm.
financial war cycle. Are we in any way, shape, or form heading for any type of war cycle? Looks like things are cooling off in North Korea. That's another Trump deal, which I think he's got a lot farther than anybody else. Are we looking like we are simmering down, or going into, or going away from a war cycle? Just your last thoughts on that.
No, we're still going into it, but it's not. I put out pieces on it. I said, look, it's not going to be Korea. Um, it's more into the Middle East, and Syria is really the focal point. It really is. Korea, you have to understand what it was even about. He was pushing like that because the economy is doing so poor, people are starving, and when you get into that sort of an economic cycle, typically they overthrow the government. So what do? If you're trying to stop that, you need an external enemy, and that's what he created. It's standard operational procedure. All right. Then, okay, fine. Is he really wanted to get into a nuclear war? Of course not, because he knows he's going to lose. But he put on a good show. And then it's like, okay, fine. I'm the guy that's going to create peace and open up the borders. And then everybody cheers, and he's still in power.
Yeah. And then Middle East. So you're thinking we're going into a war cycle in the Middle East. Syria is not looking good. I mean, Iran is building all these bases in Syria. There's a lot of cross-border fights between Syria and Israel. We have people there. The French have people there. The UK. I mean, it just looks like, whew.
You have to understand what's going on in the Middle East. At the root of it, it's a religious, it's like the Catholics versus the Protestants in Ireland or England.
Sunni versus Shia.
Yeah, I mean, one believes that the church effectively should run the state, and the other one believes in separation of the powers. That's really what's at stake. So Iran is more of the Ayatollah should run the government. So what does that really mean? It means that any kings, like in Saudi Arabia, should be overthrown. So that's what you're really dealing with. And then you have Turkey, and he's basically at the head of a situation where he really thinks that the Ottoman Empire should be restored. And of course, that's to his own benefit because Turkey was the head of it.
But nothing you see on the horizon immediately on the war card, on the war frequency right now.
No, it's building up. Basically, it turned up into 2014, and what you're seeing though,
2024, you mean?
No, it turned up in.
Oh, I'm sorry. I misunderstood. I'm sorry. So it turned up in 2014, and here we are, 4 years later, and we're still on the glide path towards some sort of big conflict.
Yeah, but it's not necessarily. You have to understand is that war has really become. And I just wrote about this too. I mean, war has become kind of obsolete in the sense of, does China really want to invade the United States and occupy this place, or do we want to do that to Russia or China? No. It's like it's like two drunks in a bar, and they're just, they start fighting because one guy looked at the other one wrong. That's it. Is there any logic to it? No. What is the objective? There is none. All right. But what we're looking at, which is much more confrontational, is civil unrest. It's rising everywhere. So this is part of the separatist movements. You saw it in Catalonia. You see, it's Italy, basically. There's a lot of people are getting very violent because they've lost everything. And Hungary, I mean, you had, they just reelected the head there because he's against the EU with over 70% popular vote. Nobody in the history of any Western countries ever received such a high popular vote. The biggest president victory we had was Johnson, and he got 60.8%.
All right, Martin Armstrong, your conferences are in Singapore in middle of June and in Orlando in the middle of November. I will put the links up to your site, Armstrong Economics. I think it's on your site pretty prominently. Wow. Thanks for coming on. Let me pepper you with tons of questions. It's an in-depth interview. Hopefully I did it justice. You're way smarter than me, my friend. I just hope I kept up with you and got people some information they needed. Thank you very much for joining us today on USAWatchdog.com.
Well, thank you for inviting me.